how's it going, guys? Welcome back to mentfx, and if you have not yet seen the previous video, the one that dealt with the eyes of the bank's liquidity in the market, make sure you watch it as I discussed in depth the way we view liquidity and how we think about this market. And as you can see at this point, I was showing you guys what we were expecting, that being that price would continue to deliver lower into these areas here and this liquidity here. So if we go ahead and draw this out, I'm pretty sure I do speak about this at some point in this video. So yeah, as you can see, this was live price when I uploaded this video. So clearly we were just coming under this low right here. And what we were doing, let's turn myself down here. We were talking about what retail is doing, which is ultimately buying into this, putting stop losses here and stop losses here just under the sell stops, looking for that to be cleared. But what we were looking at is for the continuation downwards because of the fact that we are still delivering on the run of sell stops to the downside, right? So if this is a little bit confusing to you, make sure you've seen the previous liquidity video. But ultimately, the way you have to think about it, and just a small quick recap, is that above and below every single swing high and swing low in the market is ultimately what we like to call liquidity points, right? And these liquidity points are usually seen are usually seen as, there we go. These liquidity points are usually seen as buy stops or sell stops. So on the bottom, you're going to have a ton of sell stops, which means that there's stop losses from people that are looking to buy a market and from people looking to take the breakout. And when those get ran, it allows for institutions or smart money, which is always in the form of multiple individuals. What you guys have to realize is sometimes smart money itself is actually its own band of retail traders. So it's a weird way to think about it, but we'll get more in depth on that in future learnings as we continue to release content. I have something enormous planned for you guys coming up. So as you understand, above and below every swing high and swing low is ultimately going to be liquidity. So we're gonna draw this back out really quickly. And as you understand, we've been bearish on this market since the video we released, which was here. And we've been looking for it to deliver lower into at least the imbalances present at these points right here. So if you don't know what an imbalance is yet, make sure you check out my other videos, or you'll understand that any clear price action between two wicks and a body going through is ultimately inefficiency in price and is an area that's going to be that's basically going to have to be fulfilled on the bounds of supply and demand, because there was a inefficiency between supply and demand in these areas. Therefore, price usually tends to target them after it creates whatever move it had to on behalf of smart money. So during the actual week, what we had is price did indeed play out downwards. I know that a lot of people in the mentorship actually caught this down. That did not send this out. The video was out on this, and a ton of members, including the funded members, were able to take sells inside of here, and we're going to take a look at those sells. So very quickly, word of wisdom, I myself did not take any sells on this market. My main awesome trade this week was the 1 hour USD CHF. Ultimately, it was this setup right here, just inside of here. Missed the first one, so I was looking for a 1 to 27 on that first one, missed it, was able to catch the 1 to 59 on the next one. Again, what you guys have to realize before you click off or call me a scam is that I take about minus 10 to 20 trades in a row, including another 20 to 30 of break even before trades like this happen. I go in depth on this in the mentorship. I have no reason to go in depth on it on the YouTube because as much as you guys might not want to hear it, people don't give a shit about losses. People don't really care about that risk management side, but it's something that I stress, I think is important. And if you don't understand how trades like these are possible with 1 to 59 or something higher, the reason they're possible is because we're allowing ourselves to work with a win rate that's substantially less, but we understand that the reward always lies in the long term with an edge. Okay, so this is something that's going to be covered in the future as well, so don't worry too much about that. So my main trades was on USD CHF, but right now what I want to do is talk about GJ with a lot of you, because as you all understand, we had released that video, so make sure you've seen it if you haven't yet. Price was live at this point, and we were continuing to look for the delivery of price to the downside. So let's maybe get rid of all this retail logic on the backside. But ultimately, as you can see, we're looking at just basic structure, looking at those structure breaks down and the new beginning of running sell stops. And as those sell stops get ran, we're looking for more sell stops on the bottoms to get ran. So the main idea we were looking for is to see this ran. You can see these buy these buy long positions I put on here, this is what retail is thinking. This is not buys that we were looking to take. I was showing you guys the thought process behind smart money and retail at the time of making this video. So back to this right here, we had a lot of people in the mentorship catch this down move here, and we're going to talk about how that move was caught using the things taught here. So very quickly, let's get rid of these liquidity points and discuss what you can do to get involved on markets like this, even when you think you've missed the trade overall. So we clearly understood that we broke structure at this point right here. And after breaking that structure, we began to use the last up moves before the down moves to trade down into the market. So the supply zones were tapped, right? Those last up moves before the down moves, supply zones were tapped, imbalances were fulfilled. Those inefficiencies between supply and demand, between buy and sell orders in the market were fulfilled, and you used to enter new trades and taken lower. And as they were taken lower, the sell stops that lay on the bottom of these points right here were cleared, and ultimately we began a bearish move to the downside from a smart money perspective that should now continue to run its own lows. So we come and run this low, and again, similarly, that low run comes from the last up move before the down move. And if you don't understand why I'm drawing it like this, make sure you check out my other videos, or if you're in the mentorship, you clearly understand how we're viewing this right here as its own supply zone. Price comes and trades back up into that supply zone, clearing whatever buy stops lay above these wicks right here, fulfilling the little bit of inefficiency or imbalance that exists between this wick and this wick. So again, an imbalance between supply and demand orders, and continues to deliver lower. As it does that, our bias continues to stay the same. Remember my other videos that discuss the idea of not trying to pick a top or bottom or trying to predict the end of a trend or the beginning of a trend, and instead allowing the trend to present itself and trading within that trend, understanding that over time, the reward in your trades and the edge in your trade is ultimately the fact that you are able to catch these large moves, or at least predict the directional bias and the liquidity delivery of a specific market. So after this low is made and price trades back up, similarly, we again trade into the refined supply and demand zones that exist within these areas. So they're not always going to be perfect, and we're not going to talk about how you could have refined this to have a perfect supply and demand zone, but ultimately, as price gets up here and fails to push higher, gets above some of the highs here and holds on to its previous protected highs existing at this high right here, which was responsible for the push down, holding under it, we understand that we're just running whatever liquidity was left above any of these highs here. So anyone that had buy stops above here, here, or here, which we again understand are in the form of stop losses, were ran with this candle here and price delivered lower. Again, we came back up to test whatever was left up inside of these supply zones here, fulfilling whatever imbalance and inefficiency existed on a lower time frame there, and began to deliver lower. The video I released last week was to do with the break just below this. I think price might have been actually like right there. And what I basically said in the video was that at this specific point, a lot of retail, as you understand, has support and resistance lines drawn here, support resistance here. We'll do it quickly. Has support and resistance lines drawn. Let's make this look nice. There we go. Let's go full retail for a second. Had support resistance lines drawn here, support resistance lines drawn here, probably drawn a little bit here, probably one drawn across this right here, right? And at the same time, they more likely than not had this trend channel, right? So there's a lot of stuff that retail was looking at this point, but the main thing that you have to realize that retail was pretty much doing, and again, I don't do retail analysis, but I understand how retail kind of thinks. And ultimately what they were looking for were the zone trades between these zones, but at the same time, they were looking at the breaks up, and all of this time we're looking to take buys in here and here and here and here and here and here and here, and even right down here, right at these support lines. And all I said in the previous video was that we need to assume and operate under the assumption that, you know, it doesn't really matter what retail is doing, because sometimes retail is going to be correct, but most of the time they're going to be wrong. And instead we need to go and focus on what the institutional orders are doing. And in this case, the institutional orders were clearly delivering lower for the purpose of fulfilling these sell stops here, and potentially still, so the next week that hasn't started yet, because it's a Sunday right now, and our mentorship webinar is starting in about 40 minutes. And again, if you want to be a part of that, be part of all the concepts we share there, the in-depth private time, the one-on-ones, make sure you check out this link down below. It's also in the description, so feel free to do that. Otherwise, I hope you're learning a lot from these free videos. And we're looking for it to ultimately deliver into the inefficiency points shown by the imbalance present here. So that's exactly what price did. And you can see me talking about that right here. You can see the outline of that imbalance. So make sure you've seen this video, because it's going to have a lot of in-depth knowledge of the before and after of what occurred. So price does begin to run those. And again, we're looking for the main run of this next low, because as we understand, ever since this break, we're running the sell stops. Sell stop ran, return to supply and demand. Sell stop ran, return to supply and demand. And now we're looking for the next sell stop to be ran at this low. A very simple way to follow price, but something that a lot of people forget and are not able to do because they get clouded by the judgments made inside of zones, trying to imagine that zones are holding for some reason, trying to look at the breaks of certain areas such as trend breaks and trying to follow those without recognizing that no new trend has been put in place, and the real present trend currently is ultimately this daily delivery of bearish price action. So how are people in the mentorship able to still catch this and make good movements on this? So this is actually going to be a two-part video almost, where you're going to learn your own way to be involved on a bias that you are able to preset for yourself. So we've preset that bias, which we actually preset at this point here, as you understand, to see price continue delivering lower. Now, it's not always enough to just take a sell right here, stop loss above the high, and look to target the low. This is not the way we trade a smart money, because we understand that since the market is fractal, we're able to take our setups and fractalize them down to the lowest possible timeframes if we prefer. So I myself look for entries usually on the 1 minute to the 15-second to 5-second timeframes. However, we have people in the mentorship that are very profitable trading daily, hourly, 4-hour, weekly. It's really up to you. I had someone who had a I think like $1 million or $2 million account that went off to trade only swing because he understood that he didn't need to be involved on those much lower timeframes. So very good for him. But the main point of saying this to you is that you realize that your system can revolve around any time frame you prefer to revolve around and any market. Okay. So ultimately, we'll go to the 4-hour chart now. And what happened is, I think the most of the people that were getting involved at this point. And ultimately, if you take a look at what's occurring here, we're having the lower time frame areas delivered to us again. We're having a bullish structure that is now clearly shifting bearish, and we're clearly running whatever low is here. And we clearly understand that now we've put into motion a bearish market. And at this point, if we ask ourselves, where do these breaks of structure come from? With the assumption that price still wants to run into these lows right here. Because remember, what we're doing is we're saying, okay, market's bearish and it wants to run and continue running these lows. These are those daily lows. So how do we run those lows? And again, if you're a little bit confused right now, make sure you've checked out my other parts of my other videos on the channel, or else this might seem a little bit perplexing, a little bit confusing. Well, let's continue. So price breaks the structure, and ultimately we have to ask ourselves, where's that structure break coming from? Where are the inefficiencies that are causing the structure break? And how do we look to be involved on this? So ultimately, if we just take a look at this breakdown and look at the most recent price action move, this break of structure ultimately came from potentially somewhere up inside of here, right? So this is that last up move before the down move, clearly leaving behind a very easy opportunity of imbalance, right? So again, price could make its way all the way back up here, just like this, and we could begin to confirm our entries with Wyckoff to go short, right? To continue running the lows of the higher time frame. Or we can look for the supply zone right here, which is also the same thing, which we can draw out again. You can see that even though it looks like it's been mitigated, there's clearly just a little bit of imbalance still left there, which means whatever highs are here are acting as their own liquidity points. So this right here, right, is acting as buy stops or liquidity at the top of that high. So there's buy stops there, there's buy stops here, there's buy stops here, and there's buy stops here. So again, across all time frames exist wicks and swings that have their own liquidity resting in or above them. Why are these all buy stops? Because if we go to a 30-minute or a 15-minute chart, for instance, there are people that have begun to get into sells on this and are looking to sell it and have begun to trail their stop losses to the highs, the new highs, the new highs, the new highs, the new highs. And ultimately what's going to happen, so this is also an area of buy stops, and ultimately what we're looking for as smart money, and the reason why what we do works, is we're looking for the liquidation of the people that are getting involved. Now, here's what you have to keep in mind. If this liquidation does not occur, we miss the trade and we allow it to run without us. There are going to be times in the market where the move runs without you and you aren't able to get involved. But the reason why what we do works is because when we get involved, we understand from a core foundational level, from a conceptual level, that we're getting involved on the clearing of liquidity or the clearing of other people's orders in a certain move. So if we're looking for sells here, we're not just looking for sells here. We're also looking for the clear of all the people that have already gone into sells, and we're technically using these sells, or the banks, the institutions, the smart money is using these sells to piggy to go down, and we're using their orders that are taking out all these people at these highs to trade down, and we're piggybacking on those trades down. Because what you have to realize that is, again, what I used to say is that on every time frame, some kind of retail sees some kind of pattern. And ultimately on this time frame, even the 30-minute, even the 5-minute, what retail is ultimately looking at is, again, the breaks of support resistance, the new breaks of support resistance, and looking to start to trade these down while also focusing on the new trends established. At first, they're looking at this trend right here, looking to maybe sell this third touch. They're also looking at this trend right here, looking to sell maybe this third touch. They're also looking at this trend right here, looking for another third touch, and maybe even FOMOing into these trades because they see that they're not coming up to the trend lines. And as they're doing that, what we begin to see is, you can see actually the third touch holds, gives them their little cookie. Again, they're all piling into shorts here. And as we break more structure, they're looking to trade the new support resistance line, right? Support resistance, are looking to sell that. And clearly they begin to get liquidated. So I'm not always thinking all this, just so you guys know. When I'm trading, I'm not thinking about all this retail logic, but I understand how retail is being involved in this market. So when I do look to get involved, I understand that there's a reasoning to get involved, as all the buy stops of previous retail, or not just retail, but dumb money in the form of dumb hedge funds, dumb institutions, dumb banks, dumb smaller banks, dumb companies, so on and so forth. Remember, we make up 5% of this market. 95% of this market is entities that are not even traders, ultimately, right? You have to realize that we are a very, very tiny proportion. So when we get involved on these moves that go short after buying to sell, we're really piggybacking on the biggest orders you can possibly imagine. Like, there's what, $6 trillion passed through this market every day. We are taking out scraps, even when you take a few million out of it, okay? So let's delete this very quickly. Whoops, my bad. Let's go ahead and go into here. Let's delete all of these very quick. Let's delete all of this, just like that. Perfect. So we understand that above all these highs, in some form or another, there's a ton of people that are looking to go short. And what we're looking at is basically two main key areas. One is up here, in which we can also look for sells, and one is here, in which we can look for sells to keep going down, because we understand our higher time frame is also delivering to that bearish move to continue that liquidity play downwards. So what we're going to do is, as price approaches that high, we're going to get to a lower time frame and look for what we always look for, the confirmation. I've always taught this everywhere. One is your structure or your bias. Two is your SND zones plus your inefficiencies, which are looking to be filled. And three is your Wyckoff or your confirmations to get involved, right? This is what I've always taught. A lot of people have started to teach the same way. That's fine. I love it. It's great. It means I'm inspiring other YouTubers and traders to trade this way and teach it, I guess. But ultimately, this is what I've taught forever. Since the very beginning and inception of my channel, I've taught about the fact that you need to create a story. The story needs to be supported by zones and inefficiencies that you're willing to trade from, which in reference are also supported by the idea of liquidity being cleared out as you look to be involved, or liquidity being cleared out as you look to be involved from either point, right? So there's a reason to go short here, but there's also a reason to go short up here, right? This is why we confirm. So you have those S&Ds to confirm that. And three, the thing that creates the real RR in the business, or the real profitability, is where you look to confirm those areas to go short, and you understand that you are creating a mini edge every time you do confirm. So what we're going to do is we're going to get to a higher time frame and wait for price to come and tap into that. So ultimately at this point, what I would be doing is I'd set up a alert here and an alert here, and I'd really just go away from the computer until an alert went off. As that alert goes off, let's see if it even taps in. So that it does tap in. So at this point, I'll be on a lower time frame just watching this. And ultimately, maybe I'll go to a 5-minute. I'll be playing around with time frames and looking at what's occurring inside of price at these points. And ultimately, what we see is, again, this is going to be a more simpler version of it, but we're seeing Wyckoff occur in here, right? We have the preliminary supply into the buying climax, into the ARs, into the STs, into the sign of weaknesses, into the intermediary STs that then get cleared by the upthrust, that then gets cleared by the UTAD. So we understand that we've had a schematic play out. There's a schematic inside of here, which you can study. I'm going to have future videos released on Wyckoff for a lot of you that don't understand schematics in depth to understand them more in depth. And then you're gonna love that video. It's gonna be the evolution of Wyckoff, basically, and teaching you guys how to see Wyckoff from the very, very bare bone. And again, we have a very structured course in the private material. So if you do want to get a head start and begin to view the market with an edge on your part, make sure you check out the link down here and see if you want to join up on that. It's an amazing community as well. So What we're looking at here is ultimately that Wyckoff is occurring, but we haven't had, as you understand from my previous videos, a real displacement in price. We haven't had proof that price wants to really move down. Price can just as easily reaccumulate now and just continue going long. And if it does, that's fine, because we understand that there is no intention yet. There is no displacement, as we like to teach it. There's no displacement in price yet to show you that it wants to go bearish. But we understand that we are tapping into currently our higher time frame zone, right? So we have this one up here. So we understand that if this one doesn't want to hold, we're clearly probably going to be set to start running the buy stops above this high, this high, this high, this high, and this high to come and fulfill this inefficiency and go short from there. So let's go back to the 5-minute chart, right? Is that what we were on? Perfect. And we can wait to see an actual reason to go short. So price is indeed breaking down here, right? Now this is where it comes important to understand timeframes are not there for the purpose of timeframes, but are there for the purpose of price. We use timeframes to see price. And as we look at it, even on a 15 minutes, we can switch around. We understand that still there's a distribution going on here, but that distribution is still really being supported by all of these stops here. And we understand that it's still pretty bullish. It can still easily revert and go bullish. So what we'll ultimately look for here is a breakdown below these points right here, right? So we can wait for that breakdown. Okay, so in this case, we're seeing that there's a clear displacement in price. Price is impulsively moving to the downside. Momentum is clearly to the downside as well. And because of this break, we now want to go short. Right now, where can we go short from? The Wyckoff is pretty much confirmed. One, you can pretty much sell into it. And this is one way to do it. And you can start to target, as you understand, your zones all the way down here. So it's about a 1 to 7. But what a lot of people in the mentorship did, and what I saw a lot of people do, and again, remember, I did not catch this move. This is a reiteration of the way you could be involved on this move, which was fully predicted to you during the release of this video, which was live. You can see the live countdown of candles there. So we basically predicted the move back down into these zones. And ultimately, as we look at this, there's quite a few areas price could come and bounce off. So what we do here is, again, we revert to the understanding that price doesn't move with timeframes. We use timeframes to view how orders are being placed into the market. So in this case, what I see is this big liquidation, this move down, this test of that liquidation, and then this move away. So ultimately, there's some kind of area in here that may want to be tested, right? But I can't really see that something that well. So I'll go to a 30-minute and I'll play around with it. On a 30-minute, again, I don't really see anything too easy to see. So maybe I'll go to a 1 hour. In this case, it becomes quite apparent that these breaks down. So again, it might be weird to look at, right? Because all we're looking at is a few candles here that are breaking down, but we understand, because we witnessed it on the lower time frame, that there is clearly a schematic unfolding, because we're clearing liquidity of short-term quick sellers. And now we're looking to displace, and that displacement is shown right here. So what we understand is that displacement is ultimately happening from this last buy, from this last buy to sell candle right here, which means that now we can look to ultimately be involved on that last buy to sell candle instantly, right? And you can look to basically just take this all the way back down to that liquidity point we outlined, if you remember, on the daily chart. Again, this is how price action is multi-time framed, multi-fractaled, and this is how you get involved on movements anytime you really want to in any market. Now we can begin to play around. We can go to a 30-minute and begin to refine. What we can do is we can take a look at this. And now, as we spoke about it, we understand that yes, this candle did liquidate highs, but as it broke down, we had this candle right here come up, test whatever was in this up move before the down move, and then break down. So ultimately, what we did is we left behind this right here. And now, again, we have the same thing we saw earlier, inefficiency in price, right? Shown by the empty space between here. So we understand there's an inefficiency between buys and sell orders, the supply and demand of this area, which means that whatever institutions or smart money were mitigating their positions from these buys to sell have not been able to do so in this area here. So if they are to get into more orders and close the orders that are in negative positions, they are going to do that at these points here and go short. So what we're going to do is we're going to basically sacrifice potential entries, which would have been here off that higher zone, and move it to here. And now we can also allow ourselves to be more aggressive with the stop. Now, again, the stop is about, what is this, 0.09. So that makes it, is that 0.9 pips? No, it's about 9 pips. I don't know how to read pips on GBP, JPY. I actually forget. We can maybe do it like this. Okay, yeah, so about 9.6 pips. So as you understand, if it's 9.6 pips, GJ usually has a spread of around 0.5, 0.6, sometimes a little bit lower. So we're going to add that on to make sure that we are not going to be stopped out of the trade randomly. So instead of 94, we'll have 102 to ensure that the trade does not get stopped out with spread. We'll make it a tiny bit higher at 106. Right? And ultimately what we're going to do is we're going to look to, again, trade it to the downsides of those liquidity points. Now, what's interesting is that's already a 1 to 26. And now we can basically just let that play out as is. So it begins to break down. The structure is still clearly bearish. That disposition in price, that displacement is still occurring. And that area is still left behind. If price began to make new structural plays, I'd be more concerned about this area because structure has began to shift. But in this case, there's no reason to shift. So we do actually get a tap of that area. And ultimately, what you have to realize already is that just because we haven't delivered to any partials or any take profits doesn't mean we can't begin to manage this trade. So what I usually do is areas of liquidity, like this low right here, already serve as an area for me to partial, usually about 50%. So you can have that, you can use that in your own subjective trading. Again, this is not any financial advice. This is all educational and perspective based. So hopefully my education helps you guys become profitable. And it clearly has made a lot of people profitable in the mentorship. We've had about new three funded members with a prop firm every month, ultimately, or more. I'm not 100% sure. So you want to be partialing at this low right here, just because in my book, this is still its own structural play. And ultimately, if price wants to get below this point and then go long, it has a reason to do that because it's grabbing, again, the sell stops below this low. Otherwise, it'll continue going short, in which case you can begin to profit off this move down. So again, if you think about this is partial at 50% at about 8.7 RR is equivalent to about plus 4% on this move, right? And then on its way down, this is assuming a 1% risk, and I don't even risk 1%. I usually risk about 0.25 to 0.5%, depending on the account size and depending on my drawdown. So I have my own risk management protocols, and I will be teaching those in the mentorship. But right now, we're not going to get that deep because there's a lot to my own risk management that we need to talk about. And again, remember, a move like this doesn't happen all the time. You are going to take multiple losses and you're going to take a lot of break evens. You have to be ready for that. So ultimately, at this point, what I'd be doing is, because structure on this lower time frame is this currently, if we got a break below this, I'd be happy to break even on this without even having any partial. So let's take a look at what happens. So price plays around. Okay, so price breaks down. At this point, I'm already broken even on this trade. I did not trade this, but the people in the mentorship that did catch this were breaking even and managing their trade as price broke, because we understand that just because price is breaking down doesn't mean we need to hold this with full risk on. There's no point. This is how you stay out of trades that are bad. If this price came down here, liquidated these lows, and then went long, this should count as a scratch off for you. It should be nothing, right? It should just exist in nature, in space, in outer space. It was a break even, and you look for your next trade. But some people hold shit like this and get greedy and allow it to lose. Additionally, some people would have already partialed or profited or tried to close all their position here because it's already up, like at this point, it's already up 1 to 2. And that's more than they've ever made trading retail or a lot of retail concepts the way they're taught. So they'll look to partial and they'll be happy with a profit. But what they don't realize is if they do that, then the trades that you have to take -1s on and break evens on are going to eat into those profits big time because you're not allowing your edge in the market to play out. Okay. So ultimately, that would be a break even already. So the SL would be, you could even incorporate just a little bit lower just to make sure that the commissions on the trade are taken care of. And now you are looking to take it lower. And ultimately, now you just leave it to kind of run. So the partials get met almost instantly. And at that point, maybe you close your trade near the end of the day because this was a Friday. So spreads do widen a little bit, or you're still holding this currently at a floating plus 16% profit. It went to a plus 19 in total, but that doesn't matter because we don't just close because it seems like a nice profit, right? So I don't just close because it trades up 50% or up 20% or up 10%. I close because there's a reason to close and there's a reason for price to deliver to certain areas. So in this case, the bias doesn't really change from what we had originally. But what this allows us to do is look to take trades that are going to guarantee us a high reward play, which is why we're able to do what we do. So this is kind of what I did on USDCHF. We'll be talking about that this weekend in the webinar. If you don't want to miss that, or if you want to check that out, make sure you join the mentorship with the link below. And there are a ton of private unlisted videos available to you there with in-depth breakdowns. Every weekend we have new content released with answered questions, one-on-ones, and almost anything you can imagine with one of the most active and best groups you can probably get a hold of. So thank you so much for watching, guys. I hope this gave you a good insight into how you can transform a bias and a story into an actual position and into an actual trade using every concept taught on this channel and the in-depth concepts taught in the mentorship. Thank you so much for watching, guys. I hope this video made sense to you guys, and I hope to see you guys profitable over the next day, week, month, and next coming years. Thank you so much, and I'll see you guys in the next video.